Hello and welcome to CMC Markets and this quick look at the week ahead beginning the 5th of June. And unless you've been living under a rock for the past 5 or 6 weeks, you'll know that we've got a general election on the 8th of June. And certainly things are a lot less cut and dried now than they were 2 or 3 weeks ago. 2 or 3 weeks ago, the Conservatives had a double-digit percentage point lead. And that doesn't appear to be the case at this point in time. So that has raised a number of different scenarios as to what could be the outcome when the results are announced on the 9th, on Friday the 9th. And one of the scenarios is obviously a hung parliament with the Labour Party trying to cobble together a coalition between the SNP and the Lib Dems. That still remains an unlikely outcome, but nonetheless it's something that we have to factor in, and certainly something that the pound reacted to earlier this week when we saw a big drop from around about 129.5 to the support there around about the 127.5 level and the 50-day moving average. But it's also forced, I think, traders and investors to focus on the likelihood that the Conservative Party could still get a majority, but albeit a much smaller one than had originally been anticipated. But I think even if the Conservative Party get a 40 or 50 seat majority, I think ultimately that will be enough, even though it will be below what a lot of people were expecting when the election campaign kicked off. Certainly Theresa May has come in for an awful lot of what I would call justifiable criticism, I think, for a number of own goals with respect to her manifesto launch. But ultimately, given the calibre of the candidates against her, I still think it will be a significant surprise if we got anything other than a Conservative Party victory on the 9th of June. And really, I think the only thing up for debate is the extent of the Conservative Party majority. Now, at the moment, they have a majority of around about 17 seats. If you then factor in Ulster Unionists and what have you, that brings it out to 26. I think it's unlikely that we'll get a majority of anywhere near 100 seats, given the events of the past few days. Certainly, in terms of the data, in terms of the economic data, that still appears to be holding up fairly well. We've had another very good manufacturing PMI number for May, plus well over 55 for May, 56.7, which goes in line with the 57 that we saw in April. Construction PMI still looks to be holding up quite nicely, though as I record this video I don't know the number of that. And also the fact that we will have services PMI coming out on Monday, and that obviously is going to be a key bellwether given the fact that services makes up a significant majority of the UK economy. Also later this week we have the latest European Central Bank rate meeting, and that's likely to be particularly noteworthy because of the significantly improved performance of the European economy over the course of the past 4 or 5 months. We're seeing economic numbers well in excess of 55 pretty much across the board for Italy, Spain, Germany and France in terms of manufacturing and services PMIs. Inflation has cooled off a little bit, but I think it's quite likely that Mr. Draghi will find it very, very difficult not to be able to adjust upwards his growth forecasts for the euro area, even if he leaves his inflation forecasts alone. That has moderated slightly in recent months, price pressures, as it has here in the UK. But ultimately, I think the key factor, I think, for this week is going to be what the polls tell us going into June the 8th and the level of the majority that the Conservative government gets. There has been some speculation that a landslide May victory will be very much sterling positive, and that's certainly hard to argue against. Certainly, I think if we get anything in excess of 100 seats, then we could well see a retest of this 130-40 area. But even if we get a majority of, say, 40 or 50 seats after a brief dip, I think the likelihood is we could still find that sterling holds up fairly well. I think the big outlier will be what US economic data is telling us with respect to the Fed's intentions when they meet on June the 14th. We had a blowout ADP payrolls number on Thursday of 253,000. If we get a similarly bumper non-farm payrolls number, then really it's a question of not whether or not we get a rate hike in June, it's whether or not we get a rate hike in June and then another one in September. And I think that is going to be the key takeaway at the moment. The markets are pricing out the prospect of more than one rate rise, one more additional rate rise this year. So while we expect, or the market expects, that June is a done deal, the big question remains as to whether or not we'll see another one in either September or December. And I think if rate rise expectations for this year get revised upwards, that obviously could well put further downward pressure on the pound and potentially take out this 127.5 area, which I think is going to be very, very key in the overall outlook for a bullish pound and a move higher through the 130 level. So that's pretty much it for this week. As I say, watch the polling numbers. They're probably not going to be able to tell us too much, but ultimately anything over and above a 40 or 50 seat majority for the Conservative Party is likely to be probably more sterling positive in the long run than it is sterling negative. Anything less than that, then ultimately Theresa May is going to be no better off than when she was before she called the poll, and ultimately that could call into question her suitability to remain leader of the Conservative Party, given the fact that she called this election based on a strong and stable leadership platform. And ultimately, if you're a strong and stable leader, you don't throw away a potential 100-seat majority in the space of 4 or 5 weeks. So that's it for this week. Thanks very much for listening. This is Michael Hewson talking to you from CMC Markets.